if we want to get real technical, I think this is even more correct. I think we got a high here, right? I think our liquidity sweep was actually this high right here. Price pushed on this candle right here specifically past this high, and as a result, that would have been a liquidity sweep. And because of that, it moved down. Just a little bit, though, not much, right? I think our next bet is to do this right here, right? Within this little movement, because we had price push higher right here, but we would not have seen this. I really wish I'm able to like do this right here. If I could just cut this off. I know the notepad's in the way. Let me minimize that so you can see a little better. I want to do this right here, right? This liquidity sweep without seeing anything past it. So let's go ahead and mark that out. So we think price is going to move higher. So we're looking for lows to get pushed past. We're looking for low liquidity sweep. So we're looking for this right here. Down, up, lowest point actually would have been right here. Boom. We had a low here. Down, up, lowest point right there. We had most recently, because this would have been the most recent low, this would have been the candle to push past both of them and create the lowest low here. This candle would have represented our liquidity sweep, pushing price higher. And just to reconfirm that off of this candle here, I believe this would have been what we're going to call later an order block. This order block is the sign of continuation that, yes, price is going to continue moving higher from this liquidity sweep right here specifically. And again, this is all understanding that market makers are manipulating the highs and lows to force price in a direction that it doesn't want to go in. And as a result of failing to move price in one direction, as you can see, it did not, this price right here did not clear this low. And so this right here would not have been a valid liquidity sweep off of this right here. Instead, price moved higher. And sure enough, we see price skyrocket immediately after that liquidity sweep there. Let's go ahead and head to a different time frame. Let's go to 10 seconds. I can't view 10 seconds because whatever that means. Because I'm poor. That's what it means, Chad. It's because I'm poor. All right. Boom. Let's identify liquidity sweep and this. This is very recent price action. I already know. I'm getting there. I'm doing this. I think our liquidity sweep would have been, let's identify the low. Down, up. Lowest point between the two. Boom. Our liquidity sweep would have happened right here. Low got pushed past by a little. Doesn't matter how little it is. It got pushed past. As a result, price moved higher. We're forming a new low here in a second. Technically, per the 10-minute time frame, or 1 minute time frame, we are in a downtrend. Each one of these candles represents a single minute. Interesting gist here. Let's go ahead and do this. Boom, boom. Yay. From here, let's see what we see. Let's actually see why price is moving down at the moment. Because that would have involved a liquidity sweep for price to move down like that. So let's identify that. We had a high here. Boom. And it was pushed past. Liquidity sweep. Boom. We actually up, down. Highest point between the two. Boom. We pushed past price on this candle and continued to move higher. This was our liquidity sweep, and as a result of pushing higher, our movement went much further down. Technically, if we want to get real in depth, I think this is an accurate representation. We have another liquidity sweep forming now from this candle right here. We have a down up in an uptrend, right? Boom. We just pushed past. We're pushing past this candle right now. If this candle closes below this, we have 58 seconds to find out if this is going to be a liquidity sweep. If it is, that means this next candle right here is going to be a large candle going up. We're going to have another large candle just push past all of this, I think. Let's see. We got 43 seconds, chat. And I could be wrong. I think that's what the primary gist when it comes to day trade. This is like identifying with one context, one confluence as to what price could do. This is how inaccurate you can be when guessing. I thought price was going to go higher. Looks like it's going to go lower. How low is it going to go? How low is it going to go? We have a low here. Let's go ahead and actually mark these out so that way we're gold. We have a low here, down, up, lowest point right there. Boom. We have another low here, down, up, boom. Yeet. This right here actually would have been liquidity sweep on the low side because we cleared this low here, right? Not this one, but this one right here. We cleared that low, right? And as a result, price moved higher. So we're looking for now a reversal to the upside. That reversal would be this low right here getting cleared by this low here. Let's go ahead and clear this here and this here. Boom. Actually, it'd make more sense if price reversed without touching this, because we have one, two, well, actually, we had a fair value gap, a small imbalance right there, chat. Very small imbalance. So price is recovering from that, but as it's recovering, it's also leaving imbalances of its own. Looking back, let's actually go up to the 5 minute right quick. That's the 3 minute, not the 5 minute. We're going to do this. We're going to shrink that back down. Boom. Let's see what price did, actually. Is that a fair value gap in that right there? Boom. Yeah, it is. That's a very small fair value gap. There was a minor imbalance on the higher time frame. There was a saying he used to say in his videos back when he was like brand new, starting at like 3 years ago, starting YouTube, right? He would say higher time frames hold higher confluence. What does that mean? It means to look at higher time frames for, guess what? A more accurate representation on what you're getting yourself into. Don't always go off the smaller time frames because guess what? They can be misleading. Because guess what? We are right now in a downtrend. I can see that technically. Yeah, we are currently in a really, really big downtrend. We're entering a sort of consolidation period from what I can see right here. We have legit movement just. So yeah. So we cleared this right here, but we did not clear the lows. We didn't clear the highs either. So this is where things get a little interesting, in my opinion, because we don't have lows that are clearing lows, right? Unless we want to get like, I don't think we can do that. I don't think we can. Would that be a liquidity sweep right there? This one right here, we got a low here. I'm going to delete this line because I'm tired of seeing it. Goodbye. This line right here, right? We pushed past this. So what I think is going to happen because of this liquidity sweep, this is on the 5 minute time frame, mind you. Because we pushed past this low, this is liquidity sweep, I think price is going to continue moving higher. This right here is just one really big retrace filling in this really, really, really large fair value gap that I've marked out here. I understand why that entire box is the way it is. It's filling the fair value gap. Major imbalance there. So what we're looking for, I think, at this point in time, if price wants to continue moving down, which it more than likely will, it should clear this low and it should push down towards this to clear this fair value gap, making it an inverse fair value gap, which would ultimately give us a definite sign of continuation. Prices will bounce from this way higher, creating a new high. Just a thought. We want to make sure price is at a discount, though, so we're getting the best of our ability. And I think that's honestly where we can actually apply the GAN box that he was referencing, or like in the other videos. So we go to the highest high, most recent highest high, most recent low, boom. And price has crossed that 50% threshold already. So I think that is the sign of continue. Like, that is the, without doubt, if you're not seeing an order block or a breaker block, which I am more than definite there is an order block here and as a breaker block as well. I think I am accurate in saying, per the confluences and per the uses of these tools, that price is going to move higher, not lower, right? That's what I think is going to happen. And I could very well be wrong. We're going to keep this one here because we want to see if price is going to continue moving past this. If it does, it'll move lower into that 50% mark, and we'll be looking towards another liquidity sweep to the upside past this high and past this high here. Because right now there is a lack of buy orders. We are in a downtrend. We're waiting for market manipulators to manipulate the lows to fill their buy orders to send it higher. Let's go ahead and continue watching. Identify a time where the market has moved underneath the low and changed direction. Well, we moved below a low. I don't know if it changed direction though. Technically, it's still going down. Let's do this one. Actually, we've been on the 5-minute for a minute. Let's go. I can do 30 seconds? No, I can't. I can't go in the seconds. Sad. I'm out of seconds. Screw it. Let's do minutes. Just cuz. Yeet. This is a thing. Yeet. So I think actually this works in our favor. Back to back. Like candle, like down, up, lowest point, boom. Down, up, right here. Down, up, and the lowest point is way down there. This right here swept past this really quickly and changed direction immediately afterwards. But I don't think I can count that. I don't think that's valid enough to be an accurate representation. I don't think it is. So, trying to find a good one. I think it's gonna look ridiculous. I know. Nope. Nope. This is what makes things a little bit more difficult too, because you have candlesticks like this moving up, 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 right? And there's not much moving down. So because we're at the top, I think this is where we're making a mistake here. I'm looking for the reversal down low to move higher, when in actuality, because we're in an uptrend right here, I think we're looking for that change up high to move lower. And I think I literally just found it at the peak of it all. We had two highs right here. Boom. They both got swept by this candle right here, and as a result, price moved lower. That is like prime time example, liquidity sweep. Up, down, high. This right here, technically, this, what I counted as the second one, doesn't really matter because it got pushed past anyway, and it just plummeted. Yeah. Let's go ahead and remove that. This right here might be one, actually. Boom. We had market move down, up, lowest point right there. Boom. Price pushed past it. and kept pushing past it. We actually swept liquidity with this on 2 candles, 1, 2. As a result, price skyrocketed from that. Let me know if this is accurate enough. If I'm wrong in any of these examples, in any of this, let me know. You can timestamp it. I don't care. Honestly, let me know because I want to get good at this. Down, up. We had a low here. Boom. And I may have actually done this already. I could be wrong. We swept that with this. Down, up. Lowest point right there. As a result, price shot way higher. It's the first example like that I've found. This right here. This right here is going to be a difficult one for me even. So let's go ahead and just zoom into this. Boom. We had a bunch of stuff happen right here. This is like crap to look at, I think, because price isn't moving much at all right here. It's just up, down, up, down, up, down, down, blah, 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 right? And this is on the minute, so each one of these is like lightning fast, just forming. I think down, up, this right here, boom. Our liquidity sweep would have been this right here. Down, up, lowest point, boom. It failed. We had a little bit more of consolidation, and price took a rip. Boom. Yay. Do I think I am confident in identifying liquidity sweeps? I'm going to say I'm 50-50 on it. Still. I'm going to say I know more now about liquidity than I have in the past. And that now that I know where to find liquidity and how market makers use said resting orders above highs and below lows to manipulate the market, I can identify liquidity fairly okay. I'm not going to say I'm the best. I'm not going to say I'm the worst. I'm going to say I'm learning and am okay at the moment finding liquidity. Let's go to current price action, shall we? Let's go ahead and like reset chart. Boom. Let's get to current price action here. Let's see what is going on. Let's see if I can see a liquidity sweep. I want to say I do. I want to say I do see one form of that, and it actually happens to be relatively recent. Boom, right there. Down, up, low. We just swept this. I think price is going to go higher. Per this imbalance right here being completely filled. Remember when we came over here last time, right? We had an imbalance. Price saw another imbalance in this and chose to close that imbalance by moving up past this. However, it still left us with an imbalance up high. Though price can move this way, it's not going to, because this right here is our inverse fair value gap. It was closed below, so this fair value gap does not matter, nor does this right here, inverse fair value gap. So confirmation that price is going to continue in the same direction it's going in, right? We had liquidity sweep off of that right there. I don't know if you're able to see that. We had an up, down, right? I'm wrong. That's not liquidity sweep. It's just an inverse fair value gap. And as such, this right here is completely unimportant to us. We can like blur this completely out. We're on to all of this right here specifically, right? Let's go ahead and just leave it right there. Boom. What we're waiting on to see is that liquidity sweep there, and we're waiting for a fair value gap to form, or we're waiting for a break of structure. We're waiting on something that is going to tell us where direction is going to go. We have our liquidity sweep. Our break of structure, we are currently in a downtrend. We have not broke structure yet. So for continuation, we're looking for fair value gaps. We're looking for order blocks, break blocks, equilibrium for price to continue moving down. Our time frame holds higher confluence. Go to the 5-minute. Yeet. Boom. We have not swept liquidity on the 5-minute. So I don't think we're in reversal per the 5-minute. The 5-minute says it's going to go higher. Let's see what the 30-minute says. Boop. Boop. Good. Yeet. Yeet. Skeet, skeet, skeet. Anyway, I'm messing around. We had a sweep here. This low swept this liquidity here. And as a result, price should be moving higher. It looks like we actually had another sweep there, right? Price moved higher than this high, pushing price lower. And we still have our imbalance here that has not been completely filled. Actually, I think it has. It has been completely filled per this candle right here. So the imbalance is done. This is now, I think, an inverse fair value gap. I'm wrong, because inverse fair value gaps are fair value gaps that have been closed below. It can be closed into, the wick can be into it. So long as it remains in this box, it is fine. But once a fair value gap has been closed below, it has been disrespected. And as a result, is no longer valid. The fair value gap is no longer valid. It is a sign of continuation that price is going to move higher. So, two things I think I'm looking for. Two of them. I'm looking for price to close way below this. It'll drop like a rock below this green box, right? And it'll close below it. When it closes below it and disrespects this fair value gap, that's our inverse fair value gap, and as a result, price is going to move much higher. That's what I think is going to happen. We have a liquidity sweep to the downside. That is the sign of reversal from this uptrend. So price is going to continue moving down. We're looking for a liquidity sweep back to the upside for confirmation on this inverse fair value gap. From that, we can see this low right here, down, up, boom. This low would have to get swept in order for that sign of reversal that we're looking for to be valid. Where do I think I am with identifying liquidity sweeps? I think I'm okay. I think I know how to identify a liquidity sweep now. Just to keep it simple. I know why they occur. I know why they occur. I know what liquidity is and where it lies. Now, let's move on. What's break of structure? Let's go ahead and identify that right quick. Break of structure in an uptrend is when we have a lower high. So we make a new high, make a new low. An uptrend moves in a higher high and a higher low. Our break of structure is when we have a lower high. And now we are in a downtrend, lower low, right? This candle broke structure. Makes sense. Why does it occur? Break of structures, we'll get to that in a second. Inverse fair value gaps, what are those? Or let's start with fair value gaps, keep it simple. A fair value gap is 3 candles, 1, 2, 3, with first candle wick being so low, last candle wick being so high. It creates a gap, a kind of gap that removes, that is essentially an imbalance. It's got to be rebalanced. What is an inverse fair value gap? Inverse fair value gap is any any fair value gap that has a candle closure below it in an uptrend or a candle closure above it in a downtrend. Make sense? From that point on, let's go to SMT divergence. SMT divergence is when these two charts right here do not line up. We are currently looking at two different time zones. This 30-minute, boom, time frame, not time zone, boom. We have this chart here. We have this chart here. These two will look either the exact same, really close to the exact same, or they will look very, very different.